Hey there, boys and girls, and ladies and gentlemen, traders and traderettes. My name is Dr. Greg McLeod, and welcome to another edition of Bulls versus Bears, the weekly Forex forecast. And it's so good to be with you. We're going to get ahead, jump right on in to actually look at what's going on for this week of July 15th, 2023. And I'm going to share my screen and let's get it going. Okay. Again, this is brought to you by the Elite Traders University. Elite Traders University helps you become a professional trader in 90 days or less using our proprietary trading system. Go to www.elitetradersuniversity.com for more information, free tips, and also a free masterclass. Okay. Bulls versus Bears weekly Forex forecast is coming your way. Countdown. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading and no solicitation or for securities. We're not selling any securities for entertainment and educational purposes only. Okay. All right. And I've been doing this for about 28 years or so. And I trade everything from stocks, futures, crypto, commodities. I'm one of the world's foremost authorities short-term day trading called scalping. I was a currency analyst at a New York Wall Street firm, also worked at a large multinational bank. So I have a lot of experience. I love sharing with you. This is about having fun and changing lives. So let's get right to it. And we're going to be looking at our outline. We're going to be looking at the dollar index, the euro, the pound, the Aussie. You're looking at the majors mostly. And we're going to look at gold, silver, oil, S&P 500. But we're going to start off with the economic news using my wonderful, my top secret tools, not so secret, but one of my number one tools is I like using my market heat map. My market heat map is an arrangement of currency pairs by percentage change. It shows us what's hopping, what's popping, what's dropping, and what's not. You can go to www.mymarketheatmap.com and you get 50% off for annual subscription. And if you want to go for free, just try it out. Just go to the home page during active market hours, and this will light up like a pinball machine. Green is uptrend, red's downtrend, gray stay away. That's an economic calendar, and we're going to look at that. The economic calendar you can access for free. Sometimes you have to refresh it in order to kickstart it. And there you go. We have our, and then you go to filters, and there are a lot of different countries in. I take out the high, and I'm really focused on the high, and then click save. And that way you're not getting all these other countries. God bless those other countries, but we're not trading their news, right? We're looking at the majors. This highlights the majors for us. So let's go. We're going to go inside. And there are a lot of other tools in my market heat map. It's a scanner of equity indices like the S&P 500, Nasdaq, FTSE 100, commodities like gold, silver, and oil, crypto like the crypto majors, Bitcoin, Ethereum, and Litecoin. Forex majors, all those that have the US dollar in them. Then all Forex pairs, we have a full map of that. There's probably nothing really moving on right now because it's about 8:31 p.m. on Sunday. So not much going on there, right? But I also have global stocks and all Forex pairs as well, and global, right? But what we're going to focus on is trader tools. And we have charts, quotes, economic calendar, Forex TV, financial news stream, market hours, our technical analysis screener, national holidays, sentiment we're going to be talking about this week. So check your email boxes. People talk about technical analysis and they talk about fundamental analysis, but a third analysis that many people don't know about is sentiment analysis. Sentiment is basically what dumb money is actually doing, and you don't want to be dumb money. Usually dumb money is the majority, and everyone says it's going up, it goes down. If everyone says it's going down, it's going up. I'm going to be talking about that in some series of social media posts and emails leading up to our webinar this Thursday, cracking the code of prop trading using sentiment. I'm going to show you how to use that. But in the meantime, let's talk about the economic calendar because that's how we select what we're going to trade. That's what Bulls versus Bears is all about. Getting us into the right currency pairs and kind of getting an idea of where they might go, okay? Hence the word forecast. Now, the economic calendar is, I call it fun with flags, right? Like fun with flags, like on Big Bang Theory with Sheldon and his girlfriend, Amy. the one who's a host of Jeopardy now. She's moved on up, huh? So we can look at the flags and they tell us what's being traded. Like right now we're way ahead in time here. We're going to start with Monday, July 17th. 10 hours from now, we're going to see the New York Empire State Manufacturing Index. And it's Empire State because New York is known as the Empire State because the Empire State Building's there, right? And this really shows the manufacturing of the state of New York. And that will have a big influence on the US dollar at 8:30 a.m. Eastern time. Now at 8:30, that's when news releases come out. And when those releases come out, they're like wind that comes out and the sailboats start to move when there's wind. Wind is volatility. Too much wind, like in a hurricane, well, it can do a lot of damage and you can't really navigate a sailboat in a hurricane. However, if you have enough wind, you can actually, take advantage of it to go where you want to go, right? So the news will provide us with, and also tell us where many of the big guys, the big institutions and hedge funds are actually positioned. And they're going to be positioned in the euro because the euro is considered the anti-dollar. And they'll also be positioned in, maybe dollar Swiss or dollar CAD as well. So you're going to find those currencies very active around this time. So if all of a sudden, well, my favorite currency pair is Australian dollar, well, that's probably not going to work right now during on Monday because all eyes are going to be there. Later on, we're going to see some Aussie because we're going to have RBA minutes. And so maybe that's when the Aussie is going to become more active, right? So previous number, there's numbers here, and you're probably saying, like, Greg, I don't understand economic numbers. They're so difficult. And I say, don't worry, just ignore the numbers. All we want to know is that this flag is US, and we're going to see action on the US dollar pairs. More importantly, the euros, which you want to be watching for. In fact, they probably positioned themselves on Thursday and Friday to take advantage of this move for Monday. The previous number was 6.6. They expected to actually drop to 4.3 because of the Fed rate hikes. The more they hike, the less people buy, and the less people buy, the lower the price goes. The lower the price goes, then people don't need to manufacture as much, right? So that's how it's supposed to go. So they're forecasting that because of all those rate hikes, that we would see a drop in the Empire State Manufacturing, right? Which could, do a couple of things to the dollar. We'll talk about those when we get to the technical analysis. We're going to talk about these announcements first, and then there's a lot of them here. So we're going to go by them real quick, but we're going to have U.S. retail sales year on year and retail sales month on month coming out at 8:30 as well on Tuesday, which is the next day. Before that, we have the Australian RBA. RBA stands for Reserve Bank of Australia, and that's their central bank. It's the counterpart is to the FOMC, our central bank. The minutes are what they talked about during the meeting when they decided to change the rates, right? And so there's no number there. But when they start reading the minutes of the meeting, which is the summary of the meeting out loud, it's going to tell us whether they're going to continue hiking in the future, or maybe they're going to maybe cut, or maybe keep rates unchanged. And this could change the value of the Australian dollar versus the US dollar and a lot of the Australian dollar pairs you want to watch, okay? So that should be, the Australian dollar should be on your watch list for Monday as well. Tuesday, retail sales month on month. That's the US retail sales. It's going to come out at 8:30 along with year on year. MOM stands for month on month. This, last month compared to the previous month. So you're going to compare March to June. July hasn't come out yet because July isn't finished yet. So it's comparing March and June. They're expecting retail sales to actually stronger from 0.3 to 0.5%. That could be bullish for the US dollar because the Fed actually wants to see weaker numbers. I know it sounds contrarian and sounds kind of bad. Why would the Fed want to see bad economic numbers? Well, bad economic numbers means that the economy is slowing down. They're putting the brakes on by raising rates. So high numbers, which we think, oh, wow, retail sales is good. Well, that means the Fed says, we're not tightening hard enough. So let's raise rates some more. So they're going to raise rates until these numbers turn negative. I know it sounds really weird and backwards. Go ahead and search it, and you'll find out that This is complete opposite, where the rest of the nation thinks that this is a good number. It is a good number for Main Street, but for Wall Street and for the Fed, this is a bad number. If there are more people with jobs, that's a bad number for the Fed. Okay, and we need to question our government and what's going on in the policy making. Why is good bad? And anyway, I'm not going to go on my soapbox. I just encourage you need to learn how to trade and get out of whatever you're doing, because if they believe that you're expendable so they can lower inflation, you really don't want to be in that position. You want to be in control so you're not at the mercy of really weird policies, okay? That's just my 2 pips worth, but you can do what you want. Anyway, Canadian dollar CPI comes out. CPI stands for Consumer Price Index, but we're going to interpret the I as inflation. And everyone is on the watch for this mysterious inflation and they're saying that inflation is going to drop from 3.9 to 3.8%. They've been hiking rates. And again, all central banks are trying to do is raise rates to slow their economies down. And but if that number does not come out lower, then we could actually the Canadian dollar rise, because why? They're going to have to hike rates again. If they hike rates again, it'll probably be bad for the Canadian stock market. U.S. stock market will tank as well. So even the stock market, they look at, oh man, that's a good jobs number, and the stock market will sell off on a good jobs number. Okay, so anyway, and you don't really go too deep in this. You really want to basically know that there is a maple leaf here. The Canadian dollar currencies should be moving and and provide you the volatility. Because if the market isn't moving, you're not making any money. Okay, no one makes money in a market that's not moving. So if you're trading the wrong thing because it's your favorite, or I'm only focusing on one currency pair in order to be conservative, it's like, yeah, you're gonna be in the wrong one. The party is here. Look, all these flags are all Canadian and US. So if you're in South African Turkish lira, you are at the wrong party. All right. So this is where it's at. Canadian dollar, it's going to be Australian dollar. And since we don't trade the Chinese currency, and that happened already, no, it's not. Why is July 21st? If anyone, we're going to ignore that. There we go. It's gone. Now, 6:45, we're going to have CPI out of New Zealand. 6:45 is kind of early. I wouldn't try to trade this at this time, and I would wait for maybe a couple hours afterwards. But again, they're looking at inflation to rise as well. CPI, Consumer Price Index. Again, CPI, very important. Right now, it's one of the top economic things to watch for. CPI, PPI, and of course, the jobs number out of the US. Now, if we moving right along, Wednesday, July 19th at 2 a.m. So if you're up 2 a.m. Eastern time, or about 11 o'clock on the Pacific time. I'm in Pacific time now. Woohoo! And might do some live trading because it's only gonna be midnight over here for London Open. Core inflation rate month on month. That's good. Again, inflation numbers are very, very important. High impact item. They're looking at inflation to drop from 0.8% to 0.3%. That could be extremely bullish for the currency because or a big bullish for the stock market, the UK stock market, which could push up the currency. I know it doesn't make any sense. Because, well, gee, if they're not going to raise rates anymore, that's a driver of currency. That's one of the drivers. A strong stock market also drives up the UK currency. It doesn't drive, a high stock market does not drive up the US dollar because the dollar is a reserve currency. People sell dollars to buy stock, right? You trade your dollars for Tesla, you trade your dollars for Amazon, you trade your dollars for Disney, right? You trade your dollars for Walgreens or something like that stock, but you're not going, but the opposite is true for every other country other than Switzerland and Japan. Those are like the three, trade flow, cash flow kind of, there's, UK is a risk-on currency, the UK, the pound, the Kiwi dollar is a risk-on currency, Canadian dollar, it's all the others versus Swiss franc, dollar, and yen. Swiss franc, dollar, and yen are just in a whole world by themselves, right? And then we have a trifecta, I mean, quadfecta, if that's such a word. Core inflation year on year, core inflation rate year on year, and the inflation rate month on month. So the pound is going to be so key leading into Wednesday. So you want to look at support and resistance levels. We'll talk about that coming up. But this is going to be, the pound is going to be in play. It's a very strong uptrend. I talked about the King Harry coronation rise, and it's in full effect. And then at 5 a.m., hey, not to be left out or left in the cold, is the Euro CPI final. Okay. They're expecting it to rise from 123.2 to 123.5, meaning if they're behind the curve, they might need to hike rates. And if they do, the Euro will continue to move higher. I mean, Matt, we're almost at 113 on the Euro. Inflation rate year on year final. They're expecting it to drop slightly from 6.1% to 5.5%. And core inflation rate, well, the difference between core and the regular inflation rate, core is usually X or without. They take out food and energy. And like, who doesn't use food and who doesn't use energy? I use a lot of food and energy. But core, food and energy are very volatile and can make the inflation numbers look worse or higher than normal, food and energy. But if you take out food and energy, then you get a more stable number. So that's what core means, like core of an apple, the base inflation without food and without energy that can go up a lot. So we talk about core. That's what we meant. That's what's meant by core inflation. And they're saying core inflation is going to rise from 5.3 to 5.4. Again, these are forecasts, and these guys get paid, a lot of money. They have big, long degrees, and they have lots of education, and they do a lot of studying, statistical analysis and mean reversion and all that stuff, but they still get it wrong, okay? And if they do get it wrong and the market's relying on their numbers, the market will reprice themselves. They'll reprice themselves and actually, they'll say, oh man, these guys are wrong. We all bet on this. So they have to adjust because the market is a discounting mechanism. It already prices in all this stuff. When they're wrong, they have to reprice. And that's where you get the big volatility moves, okay? Now, 750, we have Japan balance of trade. I haven't really been following Japanese data, but right now the yen has been getting strong for some odd reason. Usually it gets strong when something really bad is going to happen. So I'm really watching what's going to happen. Are we going to have an invasion of Europe? Are we sending troops to Ukraine? I mean, we just sent 3,000 troops to Biden sent 3,000 troops to to Europe. So you're just wondering what's going on. And the yen usually tells us is like a canary in the coal mine. And I'm talking about the police saw canary in a coal mine, but really the guys in the coal mines, they didn't have like special, carbon monoxide detectors and all that sophisticated stuff, right? They had a yellow bird in a cage because the yellow, you could see it because he's yellow, right? Now, if that bird who's small dies in the cage while you're underground in this cave mining for coal, that tells you there's a buildup of some type of poisonous gas and you need to get out of that mine very quickly, right? So that's why if you've heard the term and you're young, you're a millennial, go, what's a canary in a coal mine? Canary in a coal mine going down, canary in a coal mine, oops, about to slip there. I know. No, it's not a song. I guess a Dilo song, or I don't know, please song. No, but canary was used as a carbon monoxide detector. And I know it's cruelty to animals, right? It's like, but the canary saved a lot of lives. So hats off to the canary. So again, the Japanese yen being super strong, very scary. For those of us who are market professionals, a rising yen usually means there's something going to happen. 9:30 p.m. we have Aussie unemployment rate. It's supposed to stay unchanged at 3.6%. Employment change supposed to drop from 75.9 thousand to 17,000. Wow. Yeah, that could be very, very, that could be bearish for the Australian dollar, right? If that is true. That's a big change, But they've been hiking interest rates. And when a central bank hikes interest rates, it destroys jobs intentionally. Fewer people can buy stuff. Prices can't go up. Prices will fall. Inflation is solved, right? Solved because you lost your job and you're doing your patriotic duty, right? You want to opt out of that program, right? Aussie participation rate supposed to remain unchanged at 66.9. Don't know how they figure that out. Part-time employment change, 14.3%. And they're not even going to try to give you a forecast on that. And I wouldn't either. So Australia is going to be really the Australian dollar, the pound, the euro are going to be on fire on Wednesday. So check it. Don't miss it. Right. And if you like to trade with one of our top traders, his name is Cut the Rope. I know you've heard of him, and he runs our trading room, and I personally mentored him, and our students are making hundreds of pips in our Pip and Run live trading room. And so if you're interested in being it's just part of our mentorship program that stresses, simulation, demo, and then live trading to get you prepared for your prop trading challenge and to help you pass that challenge. And with Jamie's help too, he's helped many pass their prop trading challenges. So part of that, we have a whole comprehensive plan for helping you become a professional trader in 90 days or less. Make sure you go to Elite Traders University. .com. Okay. Now, Friday, we have more UK data with retail sales month on month. Remember, GDP or or gross domestic product, which is the activity of a country. It used to be, it's built on manufacturing or built on, exports, but the retail sales, people buying stuff makes up the biggest activity in our economy. Now, whether you believe that's a good thing or not, it's the truth. So when retail sales goes up, it's a very positive thing. But we can see it's actually rising. We see a negative 2.1 to negative 1.5, so it's be an increase. Retail sales month on month, though, is supposed to fall from 0.3 to 0.2. And so in any event, you say, well, Gray, I don't know what those numbers mean. And again, let me assure you, you don't need to know what those numbers mean. I promise you. Sounds really cool. Well, the inflation rate dropped to 0.3%. It sounds really good for coffee or cocktail party talk, but all it is the flag, people. The flag. That flag that tells you what's going to be active at that time and for an hour or two after that, and an hour or two before. That's where the party is going to be. Okay, so you can forget all this stuff. Make sure you're looking at the high impact items. This does not work looking at yellow impact items, nobody cares. These people are big money is concerned. This is Clarence Beek's crop report. These are all crop reports, right? And there are guys looking at this data, people trying to get a hold of that data ahead of time, people buying this data, getting access, people sneaking in and taking photocopies, do all kinds of mysterious things to get access to this data. And we don't care because we have a system and we can just trade it, right? So we don't need Clarence Beeks, and we don't need if you saw Trading Places, if you're old enough to remember Trading Places, this is what this is all about. They wait to 8:30, wait till the time the bell rings, and then boom, we get this explosive move based on these reports, right? And the thing is, we're using the new stage strategy. If you attend our Wednesday webinars, we talk about that, how to trade the news and a number of other things, but how to take advantage of this without being caught up in the whipsaw movements. There is a window of time in which we can actually take advantage of this. And I'd love to see you at our Thursday free webinars. They're free, absolutely free. I'm throwing out bones. I'm throwing out more bones than milk bones, for more than a butcher shop. I'm throwing bones out. And there's some good eating there. So I'll make sure that you click the link below and go to EliteTradersUniversity.com, get on our mailing list, get the income boost blueprint, and I'll get you on our mailing list so you can receive notification of our next webinar. Okay, let's get to the technicals, people. I know you've been chaffing it a bit. When's he going to talk about the technicals? Yeah, and you can go here. There's charts in here, but we're going to go to here. We're going to close this one up. We're going to go right to, I use dual time from analysis, but for this, I'm just going to JPN 225, really nice thing to look at. Okay, we're going to start with the DXY. The DXY is the US dollar index. We call it the Dixie, the last of the Civil War relics, right? And we're going to start with a monthly chart. Monthly charts, highs, higher highs and higher lows. That way you get a 50,000-foot view of the entire market. And right, you really can't do this on a phone. You can't really do this, with a tablet. I know people, I have, guys that trade. I trade on a tablet. I trade on my phone. Good luck, right? I mean, we do what you want to do, but as for me, I've been doing this for 30 years, and I only, like, if I'm stuck in the airport or something, or trying to get to the Bahamas or trying to get to Hawaii, and I see a really juicy trade. I'm like going, yeah, I go to the Bahamas or take the trade, or I can do both. But I don't spend a lot of time just, on the phone trading. Why? Because I want to get the entire picture. I want to see multiple time frames. I want to see key support resistance levels. I want to get a feel for the market, right? I'm looking them down from this high altitude satellite. I'm looking down at the market. I'm like drawing these trend lines. I'm getting this feel. The feel of the market. You want to be able to feel it. If you don't feel it, then the market will know that you don't feel it, and then it'll take your money because you don't know what's going on. You are clueless. You just want to pass the prop challenge, and it's saying you don't love me. You just want my money, right? And it's true. But no, you've got to be a crack. This is a profession. Technical analysis is a profession. I was talking to a young man who was at the University of Washington, and it does DNA, RNA studies of COVID viruses, and I'm like, oh, that's really interesting. How many years of school did you? He was like did 4 or 5 years of school, and he was actually on a Zoom call from his research laboratory in his lab coat. I'm like going, well, do you really think that watching some YouTube videos or reading some ebooks, you're going to learn technical analysis to take money, $6.1 trillion. You're going to get access to that $6.1 trillion watching YouTube videos. Am I going to be able to learn the secrets of RNA and DNA by watching YouTube? Can I do your job as a researcher watching YouTube? He goes, no. Oh yeah, that's funny. It's like, yeah, it is funny. Well, from a professional, from a Wall Street professional, you learning on YouTube is like, really? Why don't you just send me your money in an envelope, and I'll donate it to charity. And then what you can do is you can drop a hammer on your toe. That way you'll feel the same pain of losing, and also you're giving something to charity, right? Because at least when you're losing money, you're not losing it to some greasy market maker. You're actually going to lose it to some charity, right? And feel good about what you did. But if you don't want to do that, then you really need to learn how to trade properly. Okay, so this is what we have. We can't draw that line because we don't have a candle on the other side of that. So it's broken structure, higher highs and higher lows, right? Whatever. Anyway, this is our monthly chart, and our short-term trend is down. Our long-term trend is up. However, we are breaking a range, this little range right here, that we've held for 4 months, and it's been pretty interesting because the other currencies can catch up, like the euro and the pound. While this is moving sideways, we have super moves up in the euro and the pound, right? And when we had that inflation report that came out better than expected, well, guess what? The dollar started to sell off. We had this like descending triangle. We got a break. Now, you wonder if it's a fake break, or this is a bear trap, right? We're going to trap the bears. Everyone gets so excited. What did Jerome Powell, the Fed, came out and do? We're going to have multiple hikes, and this is just a pullback in inflation. Inflation is going to come back, and blah, blah, blah. And the market sold off, right? They don't want the market to, because if everyone starts making money in the stock market, they're going to take that money, they're going to buy stuff. If they buy stuff, it pushes up prices, supply and demand. If it pushes prices up, we have an inflation problem, right? So he's trying to keep the stock market down, keep everybody kind of froze a bit. He's going to what they call jawbone the market, right? That's one of the policy tools the Fed has. They can, lower the amount of money, the amount of money being printed, right, by raising interest rate. That's all interest rate is stop printing so much money, and that it increases the cost of money, right? So they can do that. But if they don't want to do that, because they'll create a liquidity crunch where banks don't have enough money to lend, maybe you've been using your debit card recently, and all of a sudden, there's no money in order to, all of a sudden you get a fraud alert and you're just going to your local supermarket. Okay. Let me know in the chat box if you've been having stuff frozen in your debit card and stuff, because they're trying to slow I think they're trying to slow the movement of money because they don't have any, right? And I think that's a real problem, because they can't keep raising. If they raise rates, the whole money supply is cut off. Everything freezes, right? So they try to jawbone the market, says, okay, we've got to keep printing, but I'll just tell people, hey, we're gonna raise rates. Rates gotta go up. Rates gotta go up. Rates gotta go up. And by saying that out loud in press conferences and in testimonies before Congress, guess what? The rates start going up by themselves without them having to reduce the amount of liquidity going into the market. Okay, that's called jawboning. This might be a little advanced, but if you've been around this market for as long as I have, or longer, or you know that they play these types of tricks. So because if we break this level, this drops, stock market is going to the moon, Bitcoin is going to 60,000, everything just goes on risk on in the summertime. That's unheard of. What's going to happen in October? What's going to happen in December? We're going to be at we'll be at like 40,000 or something in the Dow or something crazy, right? I mean, 20,000 on the Nasdaq. They have to slow this stuff down. And so they're doing it through policy, through jawboning. So we can see the US dollar pulling back here. And, we may need, there was a couple movies with wag the tail, wag the dog or something like that, where I believe they decided that we have too much stuff. We need to have a war in order to stop things from going the way they're going. So we just need to have a war. Well, that may be something that may happen. I'm just speculating here, but if they can't use their policy, their normal policy tools in order to change this trajectory, there may be something that fear or something will need to come in order to push the dollar back up. Okay. So anyway, let's trade what we see. Okay, great, good. Okay. Daily chart, lower highs, lower lows. We have our Harami, right? A little slowdown in price drop. And so usually price comes back to return to the CNF prime. Okay, the CNF prime is this break. Break was at 100.63, and we're at like 99 or something like that. 99, 63 or something. I'm gonna turn this off because it's bright. It's super bright. 99.97. Okay, 99.97. Whole number, round number break. We should see a retest of this area. So bulls versus bears. I'm actually bullish the US dollar. And we can come back and retest this area. Short-term bullish, medium-term bearish. But I'm cautiously bearish. I'm more bullish, because this is not the time for this to happen. Usually this happens like in October, November, and this is like way early. So I'm thinking that something has to happen in order to put this back on schedule. Doesn't have to be, but just is my thought. Okay. 4-hour chart. And you can see, now if we break the low, we break 99.56, then this thing has a lot farther to drop, right? And all right, so we go back. I need to go back. I have to go back to a daily. Okay, there we go. So now we've got some areas of support. We can take, there was a double bottom here back in the 87 area back in March 2021. No, this was like the whole, this is during COVID, right? So where we are now, Fibonacci wise, we're sitting right above the 618. 618 takes us down to 99.02. So we might get a push down this area. There's lots of support there. There's also a congestion zone that you can spot. Look at that little block of congestion right there. Take that block and extend it out. And so we're right in this area of congestion where we can see some buying step in on the US dollar. Okay. All right. I took a little bit longer on that because we're at a critical point. US dollar index. Now we're going to look at the euro. Here is the euro. It's been on a tear. And let's we can start from our monthly view. And we can see that after hitting the lows of 95, that's too long ago. I mean, can you imagine that? Everyone's like, euros go to zero. No, not really, right? 95.28 was the low that we saw, and we penetrated that. And you see, we after that low, we had some indecision doji spinning top there on October, and we rocketed right back up from that area, and we have a nice uptrend in the midst of a roaring downtrend. Remember, we've been going down since the 160s. We've been lower highs, lower lows, lower highs, lower lows. This has been right. So we have a trend line, and we have maybe trend line resistance. We don't come into that to like 116, right? That's where we have some. We'll see some trend line resistance, because there'll be this area right here, this little box of resistance we saw here, right? So we have higher highs and higher lows on the monthly chart. Let's go to the weekly chart. We can still see we're forming like almost, it's like a flag, a bear flag pattern, right? The bear, it's a bear flag because we have this long flag pole, the flag, and the channel up. So it is short-term bullish, but this looks like it's getting ready to want to maybe once we get up to this old resistance area, we might turn around. But for the most part, you got to trade what you see. We haven't hit the top of the channel yet, and we have a little trend line in there. We're currently at 112.19 or so, dropping down to a daily chart. So I'm short term. I'm actually short term bearish on the euro. We've really overextended, and we could go much higher. Maybe a little, we might continue to walk this up a bit, right? And we can use Fibonacci to give us an estimate, maybe 100% expansion from this. We had this little pull back like this, right? The 100% expansion takes us. This is how we project, or how I teach people how to project and find targets. Actually, we're at the 100% expansion right now. Whoops. Right there at the 1.00 expansion. That's one spot 1212, one spot 1292, right? And the 1.618 takes us to 114.87. So if we break this trend line, it could spell doom. I mean, we've got a break of this. We have multiple tops here where people thought, oh, look at the multiple top, and then we busted right through that, right? Bull flag. And so we might have a little bit more to go on this flag pattern, a bull flag and within a bear flag. I mean, if you take a measurement objective from the base to the top of the flag, and then project that from the breakout point, and we actually have a lot more to go. I mean, you take it from the base of the flag, it takes us right to that line. Look at that. It takes us right there, right? We're in an uptrend, and until we see otherwise, we have to continue to trade it up. And if we start breaking structure, get a lower high and a lower low, and then we will look to short it. But this is stretched out quite a bit at the 100% expansion. And so I am short-term bearish on the euro. Okay, let's go ahead and move on down to the pound. Pound's going to be in play. I think that's going to be more of a play because of and has a similar pattern because basically we've been taking on the dollar, you know, and it's been taking on the dollar moving really in a range. It hasn't like the dollar's been dropping significantly. I mean, it's been like slowly diving. You know, we were at 103, now we're at 100, now we're at 9. I mean, this is like really struggling. But these guys are moving like 110, 111, 112, 113. I mean, they're blowing through these numbers on the monthly chart. And you know, we have again, we have the spike Pinocchio bar. Pinocchio bar is like this long wick, long nose, like Pinocchio. Hey, Pinocchio, hey, let's go short. Oops, sorry about that. Don't believe a wooden puppet for trade analysis. Okay, so it's Pinocchio bar. That was my impression of the Pinocchio bar. Let me know what you think about the Pinocchio. Right? And this is a full body red bar. And somebody's probably short there saying, oh, please come back. Come back down. Right? Higher highs and higher lows, monthly trend definitely barreling up, green candles all the way. For our chart, or actually into weekly chart, higher highs and higher lows, creeping along an angle, you know, similar kind of bear flag, but still creeping up higher. And our target would be, my target on this would be trying to be the old high up here that we had, the April high. And this thing, we were here up in here in 2021 in the 142 area. So that's, you know, wow, that's quite a few pips there, like 100 and 133 pips or so. So the average daily range seems to be about 75 to 80 pips, so it could get there in a couple of days. So bulls versus bears, pound. I am bullish pound. A more bullish pound than I am on the euro. Okay. So it's probably like euro pound short, maybe something that to look at as well. Okay, next currency that's pretty active. It's good. It's going to be Australian dollar. You have good Chinese data, and you know, it seems like China and the U.S. are getting along better too. So that's going to be good for Australia. Going out to our monthly chart, and I mean, strong bullish candles after a long wicks that we had back in March of 2020. We have long wick there, another reversal pattern there. So we had this down, every time we had this down move, buyers stepped in. And so we have we have a higher low, right? Higher low is our indication that we're in an uptrend. There's a low, here's a higher low, and guess what? We have a higher low than that, right? So that is our constructive uptrend. We broke this downtrend with green candles. And so we have a bullish move uptrend on the monthly chart, dropping down the weekly. Now, we're running into some resistance here in this area. This is the 69 whole number round number area. And so we're running into some, and if this is a weekly chart, we go to a daily, it's a lot more space. Ooh, no, it's not. How did that work? Was there a line up there? All right, so I mean, we pull back from a double top, right? And so the double top is pretty bearish, but we've got like an inverted head and shoulders here, which is like counter that. You got shoulder, head, shoulder. I'll draw that. It's like, great, I don't see that. Well, maybe you take another couple of martinis, you can probably see this too, right? There you go. Right. So, I mean, it's not the prettiest pattern, right? But you have a higher low, and if we break this neckline to break up, then we could see a move to fill this gap. You see this big long bar? That's a gap. So we could probably see 70 on this. So this is what we've got. And then we have bigger head and shoulders over here, right? So now this holds. We need a break. We would need confirmation. Will the bears be able to hold that and avoid this being taken out? And we have some really hot news coming out for Australia with the employment numbers and things like that. It could blow through this area very easily. We've been kind of like stuck in a range, and we haven't taken it out yet. So bulls versus bears. It's a close one, it's a close one, without confirmation. I'm looking at this and thinking bullish, right? Why, Greg? Double top bullish. Yeah, I just draw, I draw a trend line across the red candles, and that thing breaks that trend line. I'm thinking that the double toppers are going to get stopped out. That their liquidity, there's a bunch of stops here. And if you're a market maker, you're like going, these are stops right there. Oh, come on now. I'm not gonna leave that on the table. I'm gonna push right into that, stop these guys out, drive up to here, get them on the buy side, then take it back down. That's what I'm thinking, like a market maker. Not like I hope that it'll get there. And it's like, no. Because if everybody sees this, everybody's gonna go short, right? And this is when we're talking about on and we will see if we're right. We're going to talk about this on Thursday, so don't miss it. It's our webinar on how to use sentiment in your prop trading. Okay, sentiment is the third key element. If you're missing that, a lot of people go, I'm involved in social trading. If 90% of traders lose and you're social, then you're probably going to lose, right? I'll show you why. I'm going to show you a special indicator. When I used to work for the brokerage, we had something called a stupid money index. And basically, they knew that 9% of all the traders lost, so they just pulled what they were doing. And they gathered all this data, and they published it once a day. This is where traders are positioned, and then they sell this information to institutions. Because they say, hey, we don't have any contact with retail people. What are they doing? Oh, well, they're all getting short the euro right now. Oh, they are, okay. and they all start buying the euro, right? So we would actually, this information would get sold to, because we had retail traders, right? So we're going to talk about how not to be in dumb money, right? Don't be the indicator. All right. Moving right along, let's look at the party of the understated part of the USD CAD. That's Canadian dollar. And the Canadian dollar, there's lots of news coming out on that. And we'll take a look at what's going on here. Now, I've been drawing these lines here. We had this double top here, right? But we haven't gone anywhere. We really haven't, the typical target for a double top is the old, like the M. This is like an M, letter M, right? And this is like the middle part of the M. Do we have something like that? No. Okay. So you have this M, and then the target should be here, but we already hit it though, right? Have we hit that target? And is this heading north? We got a pennant pattern or flag. It's a flag. We have a flag. We have a bull flag. Well, we came off this low. We hit the target, typical double top. The double top target was this old, it was here, and there we go. We hit it. And now we're reloading, heading back north again. So interesting to see they raised interest rates in Canada last week, and we didn't get much of a pop on that. And so that's kind of telling you that the dollar is not quite dead. It's kind of like laying on the ground, huffing and puffing, right? It's like one of those horror movies, right? It's like, all right, Freddy Krueger's dead, hooray, hooray. And they turn their back, and the hand comes up out of the ground and like grabs them by the ankle. It's like, oh man, tune in, then the credits start rolling, right? To make you to watch Halloween 97, right? So dollar CAD monthly chart looks bullish for the dollar. Weekly, the weekly looks interesting too. Weekly. We're just kind of, and we have a rising trend line. We're hitting that trend line. and we're in this like flag pattern, and they drop down to a daily. We're hitting support. Look at that support right there. Even though we're trending down, we're trending up in a down channel, which is you lose money shorting this, right? Well, it's a down channel, yeah, but this is moving up in a down channel. And if you were to short this, you lost money, right? It wasn't until it hit the top of resistance that it dropped, and dropped fast, because now it's going in line with the channel, right? This is bullish right here, right? So bulls versus bears, I'm bullish dollar CAD, short and medium term. Okay, let's look at the Australian dollar. We did that. Japanese yen. Look at dollar yen. Dollar yen is very interesting. I mean, can you imagine? We got all the way up, and big congratulations. I wanted to call out Steve Bryant. Steve was one of my students, and he was one of the ones clamoring in all the groups. He's like saying, dollar yen is going to drop, dollar yen is going to drop. And then they're like, yeah. And it broke and dropped hard too. So nice call, Steve. But see, now we're, a little harami there. Although if we take this last swing as for our Fibonacci, and we did something on Fibonacci's, and for our webinar, it's going to be in our archive. What we're going to do, guys, for those of you who missed, you always talking about those webinars and I can't make it, or I missed it, blah, blah, blah. Okay, great. I heard you. We heard you. We're actually going to create a membership site. It's a $7 one-time, lifetime, $7 for you to join our Forex baby steps. I can't say baby steps. Forex baby steps, and that's going to be our where we're going to put all of our archived videos from the free, and not free, from the free webinars, but they're going to be $7. Okay, so that's one-time $7, just just to pay something, right? $7, not $7 monthly or weekly. No, this $7 one time. Right, and you'll get access to that. Also, all the archived bulls and bears, and you'll also get some, other goodies too, discounts and things like that. So that's going to be my gift to you to help you in your trading. Because I talked about Fibonacci, and look at that. How we tag. Look, tag. You're it. Tag. You're it. And so I'm looking bulls versus bears. I'm actually bullish dollar yen. Right. At least 50, 50, if you can drop a 50 Fibo from the top to the bottom like that. Oh, look, 50 Fibo. Yeah. We call it dead cat bounce. I know, even if these are old stock terms we used to say, dead cat bounces, even a dead cat would bounce. I know, don't write to me if you're from PETA or something, or animal rights activists. This is just the language in the stocks, in the in the financial market, because this thing bounced. Even though it flopped, you will get a bounce out of it, right? And that bounce is tradable. Okay, so let's look at gold. All the gold bugs out there, and gold looks very bullish. Starting a monthly chart, we were up here at 2060 area back in April and May, and we trade this in a winner circle. People trade with me 3 hours, 3 days a week, and we're going to go to Cabo, and we're going to be doing some sport fishing, and we're going to do some fishing for pips and fishing and some water sports, and it's part of our 12-month long master class mentorship. Not a mentorship, but you know what I'm talking about, right? Mastermind. Okay. Called the Winner's Circle. And if you want more about that, you can email Michelle at leadtradersu.com if you're interested in joining us. So this is what we have on gold. Lots, higher highs. And this is another thing. See, you've got this double top, and the target. This was the completion of the target of the double bottom, right? So now we rally back up, and he's like, well, triple tops. I've always been suspicious of those. I think they're like unicorns. I don't think they exist. I really think this is just a pause before a large breakout where we take out 2073, and we go up to 3,000, all right, or 2,100. Yeah, we gotta get 2,100 before we get 3,000. But we will take all this out. We have never been up here ever. We can't see that. So we've got new territory to get in, right? Just like we never saw never saw $1,000 gold one day, $1,000 gold, and then boom, we broke, and then we pulled back, and then we extended, right? Same thing here. We broke, pulled back, and then we'll extend, take out that. So I'm bullish on gold. I'll show you. I'll just walk you through my. This is why weekly has turned up, and that's what we're excited about in Winter Circle. And we've been able to score lots of winning trades on this already. This is like the beginning of a generational move higher. I'm not telling you what to trade, but this is if you're looking for a dip in gold, well, that's the dip. Don't be a dip. This is, and I'm looking bulls versus bears. I'm a gold bull. Okay. Let's go on to the S&P 500, SPX 500. And you can see that we never broke that trend line, so we continue to rally up on a monthly chart. We just kept riding trend lines up. Trend is up, so we just extend the trend. I've been drawing these lines. I'm like, I got an ETF. Let's get one that's like a triple bull ETF of the S&P 500 and just ride it up. You don't worry about stock picking, just ride it up. No matter what the Fed is saying about raising rates, usually when they're hiking rates, this should not happen. There's something very interesting going on. I'm not going to really talk more about it, but you know that you have to, with all the engineering that's going on, or the engineering genetics or engineering, different, weather conditions and things like that. This stuff is very interesting. Here's the Nasdaq 100. Usually we never have a tech rally when interest rates are being hiked. Why? Because tech firms rely on having access to loans, to capital, right? They burn through capital, but somehow they're able to sustain this trend. And I can see a move towards the 16,000 area and beyond. You can take that high out, and we're into like areas where we've never ever been before. There's nothing, nada. We're in uncharted historical territory. So this is where it pays to be a buy and holder. We broke that trend line down here back in May. That was the turning point, and I talked about that in bulls versus bears. Is that we break that turning point, this thing is going back up to the old high, right? Nasdaq 100, bulls versus bears. I am bullish, and I'm looking at buying the dips. I don't even dropping to the weekly, dropping down to the daily. You just got some. This continues to rise. Every dip is a buying opportunity. Okay, so now if you did some short-term sell or something, some quick options, yeah. But you're running in front of a freight train if you're shorting this market, right? So go USA, right? So that's oil. Oil is, seems like the economy is coming alive. With summer driving season, WTI. We can look at U.S. oil. There's a couple of things we can look at. West Texas Intermediate. We've been in a downtrend for a while, and Saudi, they've got to cut production because still there's slow consumption. We're way low. We're way off the highs of June last year. You remember we were at the 126 area. So we really, when we're basing, and usually the wider the base, the higher the rate. So we got this base, right? And then after the base, we have a race, right? Now, whether this breakout is serious or not, I think short term I'm bearish oil, but medium term I'm bullish, right? Because we're at the top of the range, we broke out. It could have been like a bull trap, and we come back in and base around in here for a while, right? But it all depends. Also, commodities are priced in U.S. dollars, so if the U.S. dollar does fall, then we would see a rising price, rising oil, right? But strong dollar keeps oil at bay, and also weaker if these rate hikes, which have been designed to slow the economy, cause layoffs, and slow, and take slow everything down. If it does do that, then we'll start seeing that we have too much oil. And we could see a falling, and maybe even break back into this channel and then break out to the south side, right? So this could be one big bear flag, right? That's the other alternative. We're on the other side of the trend line. So this is like the golden age when we dropped to like below zero on oil, contango, right? Right, so we're on the other. Once we get on the other side of the trend line, this was the bullish side, and then once we broke here, now we're on the bearish side, right? Supply, we have overhead supply, right? We have overhead supply. We broke it, and now the key is: does it come back to test the line and bounce off of it? Or does it break down and fall down through it? And so it really all depends on what's going on with the dollar. If the dollar continues to move to come back, then I'm probably short-term bearish on oil. Right? Okay, I just flipped that. Okay, guys. That's it for bulls versus bears. I want to thank you so much for joining me and being here. Make sure you share this with a friend if you think that will help someone. If you like the way that I teach, if you like my approach, if you are learning something, please let me know. You can email me at greg@elitetradersu.com and let me know your thoughts, and let me know how this has impacted your trading. And come over to Elite Traders University. We have a free masterclass. You can click here and you can register for that. You can get our free income boost blueprint. If you want coaching by me on an ongoing basis, we have a 6-week boot camp. And that's not a budget breaker. That will help you be profitable in 90 days or less. It's a 6 weeks, so it's not 90 days. We do have a mentorship class that's a little bit longer than that. But that's our Forex Foundations Power course, and you'll just love that course. We've had some really good results from students that have really learned something extremely fast. So if you want to come over and visit, I look forward to seeing you. Or if you just want to talk to us on a strategy call, book a strategy call, just go to elitetradersuniversity.com/apply, and you can book a call with a member of my team, and we'll see if we can get you on the right track. Again, it's my pleasure to help you in your trading. I want to see you on the beach with me. And we also have free webinars every Thursday at 8 p.m. We have a free webinar, and we're going to be talking about sentiment and how to use it to your advantage in your prop trading challenges. My name is Dr. Greg McLeod. I want to thank you so much for spending this time with me, and I wish you all the best. I'll see you soon. Peace and pips. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!